Good afternoon, everyone. Just thought I would kick this off because I didn't attend the Dragons Den apparently that you guys went to, which was apparently really good. But I just thought I'd want to pick your brains around what were some of the most common questions that were being asked by those Dragons about your businesses. Anyone?
What were
Anyone
you
want to have a go?
What were you asked, Cameron?
Yep.
About competitors.
About the competitors. Okay, so understanding the market or your industry that you're operating in. All right. What else was thrown out? What other questions? Yep.
What is the what is the primary problem?
Primary problem.
Yeah.
Okay. And did you have a response to that?
Because I went down two different avenues, and they
Okay.
thought that it should have gone down the second one, and I went down the first one.
Okay. Right. Cool.
Right.
Other questions?
Who else had a grilling?
Someone from this side over here?
Nick, what were you asked about?
What's my pitch?
Yeah.
Just one of the questions, what is it, just the finances or just the
Anything that stood out?
Oh, I just got told like it was a bit unspecific as to how I actually know that like how I marketed it while saying it.
Right. Okay.
Hello, what about you?
I was doing purchase, like specifically on that.
Oh yeah, so
How they go about purchasing it?
Yeah.
Oh, that's really good. The reason I asked that because I've watched a bit of it on telly, and I must say there's quite a common theme through a lot of it that I've noticed, being an accountant, and that is knowing your numbers. Because at the end of the day, you're asking someone to put their money, their hard work money, or earned money, into your business. So people want to understand how that is going to return an investment towards them. So I would have thought that some of the questions might have been, what's your profit? Do you have a budget? What's your margin? Were any of those questions asked at all?
I've got some financial questions.
I think I went about margin.
You did?
Yeah.
That's good. That's good. So today, to carry on from Tony's session, I just want you guys to have an understanding as to why we are doing this. Because yes, accounting can be boring, but it can also be quite interesting if you have a financial tie to it. Because everyone likes to make money, but not everyone understands it. So we're just trying to help you to better understand it from a business perspective, not necessarily debits and credits, all right? So just yell out, put your hand up, Tony and myself will come and help you. But I've just put together a couple of slides here, one of 100. So good luck. No, not at all. So does anyone know Warren Buffett? Or know who he is? Yep. Who is he?
He's an investor that runs, was it Berkshire investing
Yep.
firm, known for basically being the richest investor.
Well done, chocolate fish. Very good. So I've always enjoyed this one. You know, a man that has done really, really well, very famous for his investment acumen. And when I take a look at a company's annual report, if I don't understand it, they don't want me to understand it. So if you're looking at those reports that Tony and I have been showing you, and we'll cover a bit of that today, a profit and loss, a balance sheet, a cash flows, you don't need to have a deep knowledge, but you do need to understand the basic fundamentals, because that's what an investor is going to be looking at and asking questions of you about your business. So, capiche? Everyone get that? Yep? No? Tell me. So, I just thought today we'll just cover off a few things. Don't know how far we'll get into it. We might do it all in 20 minutes, all good. But just to carry on from last week's session from Tony, is there anything in Xero that you've had to play with over the last week that amongst yourselves that you're struggling with, or you maybe just want me to retouch on again for you? Or we're all pretty cool and pretty good, we're all under control, and if there's anything individual, you're going to come direct to us or through Miss Russell? Yep? No? Maybe?
Yeah.
Yeah? All good? Hold on, Tony.
Give it a couple of months.
I'm sure the questions will come as you guys take a bit more of a deeper dive. Alright, so how does that relate to a business? Team? Anything? Open to ideas?
Gonna start from the ground up.
Yep, ground up, not bad.
Lowest hanging fruit.
Lowest hanging fruit, yep, like that, Tony. Yep. Anyone else?
Tony?
Yep.
Can also go in two directions. It's
Two.
not,
Two directions, yep.
it's not just
Yep.
stagnant.
Not stagnant, yep, yep.
Martin's saying there's lots of green on it.
Lots of yeah, except in autumn. Which, to be fair, some businesses are seasonal. So, good point. Yeah, you know. So, let's just see if this is supposed to. Oh, there we go. So I like to use this to kind of explain set of financial accounts. And all your business. So your profit and loss, okay, your balance sheet, and your cash flows. All right. So profit and loss, fruit. All right. Trunk. Your balance sheet, and this works. Supposed to. The roots is the cash flow. Alright? So for a successful business, you need all three. Alright? Seen many, and I'm sure Tony would say the same. A lot of businesses come to us because they're good at two and not the third. So there's always one thing that they're struggling with or need a bit of help with. So does everyone understand that? All right, and especially when you're starting off, it's good to have an awareness about all three and how it works. And I kind of find this picture puts it in perspective, because you want it to be a big fruitful tree. You know, that's the idea of your business, and also someone's going to invest if they can see those signs early on in your business.
I've got a question for the class just to make sure. Why are the roots the cash flow?
Each day calls the other two. Like the other two can't really exist without cash flow.
Yeah, you're right. Yep, the other
Yep.
two can't exist without it. What else?
Like it grows from the roots, you know. Business grows due to cash flow and grow because of cash flow.
Yep. So cash is the lifeblood. So a tree absorbs its water through the soil and keeps the whole tree functioning and growing. So yeah, cash flow is really important, as well as having a strong balance sheet and having the fruit. But some are better than others. And I must say at the moment, in the current economic climate with COVID, and these are some of the challenges that you'll be facing, and some of the dragons will be wanting to know how you're going to manage this, is that we're sort of going through a climate of high inflation, where costs are rising, your overheads are rising, so things to be aware of, and we'll come to that shortly. But Good observations. I like some of the comments. Good stuff. So, if everyone could just jump into their Xero Demo. Just going to come out of this. And where are they? Somewhere.
Oh, sorry. sorry, it's on the other.
Oh, is it on there? Oh, there it is. No good. So if everyone could go into basically have a look what I'm doing, and we're going to go and look at a profit and loss report, please. So click on reports. Oh, there it is. Profit and loss. Yep. Last financial year, just so we get a bit of data up there. So this is the profit and loss that Tony covered off last week. Common terms, obviously, your sales revenue up the top, and then gross profit. Can anyone tell me what gross profit is?
It's like the amount of profit after your cost of goods sold.
Yep. So is there cost of goods sold in this entity? No. Right. So in this particular case, the gross profit is the revenue, for example. Yes? No? Yep. Yep. No, I'm not tricking you. That's correct. Yep. So GP is the term. This part of a business is really important. I'll show you another slide later with some overheads. This part over here, why is that important? It actually reflects the pricing, okay, of your service or of your product. Okay, this has the biggest impact on your business up the top here. These are all what we call overheads, all right? They're quite fixed in nature. Rent, office expenses, light power, we kind of know what that price is for about 12 months at a time. So if I go to you selling t-shirts, what's your break-even point? Does everyone know what a break-even point is?
Yep.
What's a break-even point? Someone?
The point where you start turning profit. So it's like the point where you stop, making a loss and you start making profit.
Yep. On the right track. Everyone hear that? Roughly? Okay. So it's the amount of sales that you have to generate to cover the overheads of the business. All right? Beyond that point, you start to make a profit for yourself. Net profit, or NP, all right? Is that before or after tax? Before, good. Yep. So we'll come to tax shortly, but just making you aware of some of the terminology that you need to be familiar with. If I was a dragon, I'd be asking questions around this sort of stuff, which is GP, turnover, another word for sales, net profit, and a big focus on the percentages. All right. I'm big on percentages. If you get the percentages right, then when you go large on your turnover, everything falls into place nicely. Otherwise, what happens is you could work harder for less. All right. So accountants and most investors love percentages. This is the first place we look. If percentages are not going in the right direction, we know something's not quite right. All right. So usually on some of the reports with Xero, you can run and you get percentages down the side. Percentages are always basically upon the turnover figure. So everything 1% on turnover. All right. And then each industry has benchmarks. So if you're in retail or services, there's common benchmarking that exists, which is good to kind of measure where you're at, and also a great indicator whether something is right or wrong, or if you're excelling or not. Any questions?
Who remembers the work from last term that we did on those percentages? It wasn't a popular lesson. A lot of us did not enjoy the maths that was involved, but we have done it, and that was one of the things that the Dragons had asked you to put on your slides, which some of you had given some thought to.
Yeah.
Okay.
Oh, that's good. So everyone knows why. Yes, it can be boring, but Xero, once again, can do that automatically, and I'll show you some features when we come to it. Right. So there's just some common terminology on top of revenue, gross profit, net profit before tax, net profit after tax. So these are the common things. Super profit. Does everyone understand that? So some people think that they have a legitimate business when they actually are the business. Alright? Because they will do all the work and they make $60,000 profit, or let's say $10,000 profit, but they are the business because if they had to hire someone, they'd be paying that amount, if not more. Okay? So what does that mean? It means there's not much returns for an investor. Okay? What you want is a business, after you take a wage for your time and effort, to have still profit left afterwards. And that's kind of what we call a super profit. Alright? So that means that, well, if I went and worked at Pack and Save doing shelves, this business, if I hired someone, is still going to return a profit to me after paying that person. So it's very hard to do when you start a business. Probably won't happen. You have to work in the business. But down the track, that's kind of where you should be looking to aim, is what is a market salary for what you are doing in the business. And you should still be working to have a profit left after, which is a super profit. Okay? Break even, we just covered that. Always a good starting point when you're trying to price things, understand what your costs are for the year. Anyone know what their budget is? You done a budget? No? No budgets?
No one done a budget yet.
No one done a budget?
Paula has. Yep.
All right, yep,
Yeah.
good on you. Was that hard?
I guess looking through the different options.
Yep. I think budgets, I mean, Tony, I've seen some complex budgets in my life and I've seen some very simple ones, and I'm big on simplicity. And a good place to start, you know, is if you have traded for 6 months, so if you've got a bit of revenue, maybe to set a monthly target of I'm going to try and increase my sales by 5% each month or 10% each month, and just put that into your budget. So Xero's got a budget manager, I think Tony pointed that out last week, where it does the profit and loss. I don't think it does a balance sheet yet, but you don't really need to worry about that. You can literally just do those little uplifts, as we call it, and insert it onto the profit and loss in the budget section. And that's a great little way to track and try and see if you can hit some targets. So I'm big on, well, you know, if you can't see where you're going, you know, then what are we doing, really? I mean, you're hoping. That's my thoughts. I love sport. Came to Westlake, played a lot of sport. And I enjoy watching the basketball series at the moment, the final series going on. And it's amazing how the Americans put stats around everything. Everything's tracked, you know, about individual players, teams, home and away. Everything has just got numbers all around it. It's because people would like to track and see if they're improving, and also they've got targets. They want to hit targets. So that's what motivates. So if at the very least use it as a motivator, it can be really simple. I reckon you could do a budget within 30 minutes. That's how quick it is. Chuck it into Xero, and at least you've got something to track every single month. And it doesn't have to be complex. Just sales, GP, overheads are pretty straightforward. They'll probably stay the same. And net profit. And then see each month if you hit those targets. There's a lot of terminology. I'm keeping it real high level here around things that I believe an investor would look at. If there's anything you want to know more about, come and see Tony and myself. Happily talk specifics about your business. And there are certain industries that have specific things that are quite, key to monitor and understand their terminology. But yeah, we'll save that for an individual perspective.
Dragons might want to know that you understand the industry as well. So you know how in your Dragons 10 pitch you've had to talk about your total addressable market? You also should know what the industry standards are. And like we said, that one number means nothing, but trends are what you're looking for, trending up or down. So you will have to get to know not only obviously your competitors as individual businesses, but the industry, okay? And obviously as you start to operate in it, and your mentor can perhaps help you find that information. I know Dan, your mentor, sent you a whole lot of things. That's where you got a lot of information about cyclists. If you do get stuck, that's what people do for, and they'll be able. They're a little bit more experienced, and they might be able to help you get the data that you need. Okay.
Xero's also got these two cool little analytics reports. So if you click under business and then you hit short-term cash flow, this works really well if you've got a bank account or two loaded and you actually insert invoices on the payables and the receivables. If you do that on a regular basis or a weekly basis, then you can have a look at the short-term cash flow projection. So we're talking about the roots of your business. You've got to understand your cash flow ins and outs, and this actually does a 30-day sort of forecast going forwards. So today, you can see, yep, that's good. Good signs that it's tracking upwards. All right. Tells you how much owed to you, what bills to pay. So once again, that data is of the invoices that you are putting in. So initially you might be raising invoices for your debtors out of Xero, but going forwards, initially you might just be making the payments like Tony said, but down the track, if you want to start monitoring your cash flow a little bit closer, you might need to start putting in the payables invoices as well so that you can get this functionality going. All right. If you scroll down, you can basically pick week by week, as you can see over here. And down the bottom, it's just basically pointing out key things around your overdue invoices and your bills to pay. So this is quite, I think it's come in the last probably year or two, Tony, yeah. This feature. And it's great for small businesses, just people that don't kind of like to look at a profit and loss too much, more like to see it in graphs and pretty pictures. That's this. Everyone's different, so I just thought I'd show you that. Any questions on that? Did you know about that feature at all? No? Cool. Okay. Now just below that, so we just looked at the short-term cash flow, there's the little business snapshot. So you can give that a hit. Alright. This is designed just to kind of cover off what we've just spoken about around profitability. So you can see here on the left, showing you April to June, 6K versus April to June last year. which is a negative 5k. So just tracking where you are today versus last year same time. On the right hand side you can see your income, whether it's up or down, and your expenses. And you can also change up here in the top right corner if you just want to look at last month, or if you just want to look at last quarter. So, and scrolling down, you can see this metric here, this box here, it talks about gross profit margin. Just same concept in this particular case, 100%, because there aren't any cost of goods. And then your largest operating expenses, which is quite good to see as well.
So if you, am I right in thinking that if you set up yourself in Xero early on, and you've got everything working in and out of there,
Yep.
and let's say a few months down the track, you do go and talk to the bank or you pitch to a dragon, all the financials are done for you, basically. As long as you know how to read Xero, where to find it, you actually don't have to get a calculator out or an Excel spreadsheet, or it's all there.
Yep.
It's idiot proof, isn't it?
Yeah, so very good point, Ms. Russell raised there, is that the coding aspect, which Tony covered last week around knowing where to code things, and it being done regularly, once it's coded correctly, the reporting features in here are great. You can produce that profit and loss, which is what a bank will ask for, or a dragon will ask for, a balance sheet. And usually I would say 90-95% accurate. An accountant would come along and do some fine tuning on that from a tax perspective, really, to be honest, most of the time. Just fine tuning the tax side of things and maybe just correcting something. But other than that, a lot of the banks at the moment are actually designing software to grab it straight from Xero, just like the IID is trying to do. And that has pros and cons. But the idea is this one source of data entry, as long as it's done correctly, and live. Being live meaning people want to know what's happening in the business now. They don't want to see numbers that are 12 months old. They want to know what's going on in the last quarter, basically, because things are moving so fast. Things are becoming way more live, and cloud accounting is the way to go, definitely. And having good data to work off to make decisions and to show your dragons and financiers, maybe the bank, they're going to love that. As opposed to a piece of scratching or an Excel that could be a bit clunky to follow.
My advice is, as soon as you can, just get it set up, get your bank account set up, and just start firing stuff into it. If this is really something you're going to carry on long term, then it's idiot proof in terms of your financials, to just get it set up from day one. So
Even if, as I said to you guys last week, even if you make a mistake, it's very easy to correct it. Like if you code it to the wrong place and you don't quite get it right, that's the idiot proof part of it. Okay, so it can be corrected by you or by an accounting friend or your mentor to help say, hey, no, that should go into that category. That's the sort of stuff that you guys will pick up. And as Mrs. Russell said, you only get to kind of, you get a feel for the expenditure and the flavour of what it will look like. And as, as Carl said, you guys setting a budget, just to reiterate, that's a target for you guys to aim at, and how am I going to achieve that, which is the key that you guys need to be focusing on.
No questions on that? We're all good? Just wanted to talk about tax.
oh, my tax avoider is away again. How's that even happen?
No, same text.
Right. Tax. Right. Let's so sole trader. I presume most of you would be trading under your own names, except for there's a partnership somewhere, from memory.
Couple.
Couple of partnerships, 2 partnerships. Okay, we'll come to that. But for the vast majority of you are sole traders. So does everyone know what that means?
Yes.
Sole trader under your own name. Yeah, pretty straightforward. Nothing complex about that. What does that mean though, tax-wise? So, each year you will have to file a tax return and pay tax on your profits as sole traders. So, to start off at a very, very high level, these are the marginal tax rates per the IRD, all right? And you can see up to 14,000, 10.5%, 14 to 48, 17.5, 48 to 70, 30, so it starts to get heavy. And a new top, over 70 to between 70 and 180, 33, and then a new top tax rate now for anyone earning over 180 of a whopping 39%.
Does everybody understand what Carl meant when he said marginal?
And do you understand what this is a progressive tax?
That's in essence what marginal means. It's progressive. So you're not all. Let's say you earn 150 grand. It's not all going to be taxed at 33 cents. The first 14k. That's what the marginal part means.
I'm hoping your 10 FSC teacher might have done this with you a couple of years ago. So it's each bit of the bracket. So it's only $48,001 to 70, which is what? How many thousand? That's the chunk that's taxed at 30%. If you don't earn anything over 70,000, you don't pay 33%. If you earn 1,000, so if you earn $71,000, only the 1,000 is taxed at 33%, not the whole lot. Okay?
So,
Got a couple of questions. No?
questions, yes.
I was just wondering, so Xero can't calculate that, right?
So Xero doesn't calculate the tax.
Yeah,
Okay,
That's
that is usually an entry that the accountants do. But as sole traders, you don't need to have that in your Xero. The most important is understanding what your taxable profit is, which is that profit I spoke about, your net profit. That's your taxable profit as a rough guide, and that would be included in your tax return, along with other stuff, because your tax return is technically worldwide income as a New Zealand tax resident, all right? So if you have other investments or receive other sources of income from trusts or companies, dividend shares, royalties, things like that.
Part-time jobs.
Part-time jobs, PAYE salaries, all of that goes into your tax return. Now, most of you wouldn't need to file a tax return up until now because you A, might not be working, B, if you do work, it's PAYE, so it's withheld at source. But now as you are doing your business as a sole trader, the IRD won't know if you've made a profit or not. You have to tell them. Okay? So, question.
So if you are, let's say that you're a company that operates outside of New Zealand, but you exist outside New Zealand and operate in New Zealand, do you pay the NZ income or do you pay your country of origin's income tax?
That's quite a technical question.
Let's say, for example,
is that what you do?
No, yes, I'm going to go to Monaco where there's no tax and I sell there.
Tax-free havens, right? Yeah.
But is that possible?
What?
So to be in a country.
So you're talking about tax residency,
Yeah.
all right? So tax residency, there's a whole bunch of tests that have to be met around that. And once tax residency is determined, that's where the jurisdiction has rights on taxing certain things. And between New Zealand and the world, there are a lot of double tax agreements, and tax is extremely complex. We have a specialist tax team, and I'm sure Tony would also outsource some of the high-level stuff to specialists because it's not straightforward. It's legislation after legislation. It's very, very complex. But to hit your question, if you are operating a business in New Zealand, okay, you are considered a New Zealand tax resident here, and you are therefore taxed here. Regardless of whether you're making your sales in Germany, America, all right, if it's through your New Zealand entity that has a residency here, it's taxed here. Because you are a sole trader, your residency is here.
It's based on how long you're here in New Zealand. So if you're here at a very high level, 6 months, technically it's 183 days, you're New Zealand based, okay? And so you get caught by New Zealand taxes. And yeah, Carl's on the right. In terms of trying to get around that, it's very hard to get around that in terms of trying to beat the system, so to speak, and operate out of Monaco as an example. Unless you were physically based there.
Yeah, that's what I'm saying. If you're physically based in Monaco and then you end up sending your products
You'd have to, you'd have to set up an entity there, or yourself there, break your ties here. So don't have ties here, which is pretty hard to do.
Right.
You know, so you'd have to set yourself up there and run your business from there. Then yes, but then you fall under that jurisdiction.
You're starting to see, like the government is starting to target sales, like on, you guys would have seen or recently, Alibaba and all those guys are being hit now. So in the past, you know, they weren't being taxed in effect. So you could trade online and sell to anywhere in the world. But the jurisdiction that you're, you know, I'm the New Zealand buyer from Alibaba, I'm not paying any tax on that. Well, they're starting to hit that now. So you're starting to see all jurisdictions. And Carl hit, you know, on the point of double taxation. What essentially that means, all the countries are sharing data with all the relevant tax authorities in each of the other countries. So they share stuff about you, and they're picking that up. And obviously with computer data, it's getting easier and easier to pick up that information.
Oh, yeah, that's
I like the out-of-the-box thinking though. I appreciate that. I mean, no one likes to pay tax. But unfortunately, if you don't, so it's the ownership's actually on you as the taxpayer. All right, just letting you know that you can't plead ignorance. It's on you to let the IRD know. And you have to keep your records for 7 years, as Tony said last week. Moving on to something that's very similar, which is a partnership. So there's two partnerships. All right. Are those partnerships? I presume that they'd just be them jointly and not a separate partnership ID number that was registered. No, probably.
Don't think that's happened yet.
No. Okay, so just a heads up. As a partnership, you can do it two ways. You can actually go to the ID and say we're a partnership. They give you a unique IRD number, all right, and you file the profitability, everything under that IRD number, and then it will obviously trickle through into the two partners accordingly, all right? Or you don't, and you do your partnership accounts, profit and loss, and the profits you share 50-50, let's just use that as an example, and you put that into your tax returns 50-50, all right? Same effect, but you're not having the actual registered partnership with the IRD, all right?
Who knows who's got an IRD number? If you've got a job or had a job, you will have an IRD number. There's a couple of you haven't. Okay?
Right. It's really simple. You get a MyIR login, okay, and you can actually just click on through, and then it's got boxes where you put in income and expenses. But if you're unsure, you know, I always say speak to someone, get a bit of assistance, because each person's unique and we all have our families and there's different things going on, and always have a chat with mum and dad as well, especially if there's trusts and all sorts of other things going on. So partnership, what that means is once it's split 50-50 and it goes into your tax return, it follows the same marginal tax rates. Everyone get that? All right. So that's how you can kind of get a rough guide to say, at the moment, you know, doing a bit of part-time work, and I'm in this bracket here, earning about 15k, and then I know that my business has made 15k. That kind of means that a lot of my tax is going to be sitting around here at that rate, you know. So don't go and blow it all on a jet ski. Put some around that sort of 17% just to the side, because you know you're going to have to pay to the tax man when you do your tax return. All right. So, just any questions on the sole trader partnership? Yep.
Wait, so you pay it after? Is there a set date every year?
Good question. Good question, actually. So when do you have to file your tax returns? All right. So if you're with a tax agent like Tony or myself, you get a year extension. All right. So the year-end balance date in New Zealand is 31 March. Okay. You have till the following 31 March under a tax agent to have your tax return filed. Okay. Once it's filed, depending on the amount of tax that you have to pay, that will trigger when that tax is due. All right. Okay. So I'm just making an assumption here. I would have thought that, you know, I don't know, if you haven't done a tax return before, have you guys filed your own tax returns? No? Anyone? Right. Yes.
I've got one.
That's right. Yeah.
I need to do mine.
How long has anyone's business been trading in the last financial year? When I mean, so pre-31 March 2022?
Yep.
Probably more importantly, was it trading profitably is probably a good one.
Yeah. And made profits?
Yeah.
It did? Well, that's good.
You got till the 7th of July.
Yeah. So you guys have got you got till next month to have it filed.
Go
So-
see an accountant and get a tax agency.
So basically, good question. I would, if you've got profits, go and speak to a tax agent, all right, around helping you to get that filed. Or if mum and dad have a family accountant, that's also a good place to start because there's a relationship there that they may have for a while. Or come and speak to Tony or myself around steering you in the right direction. Yep.
So you know how you only get taxed the profits of a business. If you buy something, just say you bought a car, and
Yep.
you put it under the business
Yep.
as an expense.
Yep.
That would reduce your tax a bit, right?
Good question. So is a car an expense? So 20 grand car, is that an expense to the business? Yes, it affects the cash flow. Yeah. So
Use it.
it takes the cash out of the business for 20k. But from a tax perspective, that's actually treated as a capital item that gets depreciated. All right. So it goes to the balance sheet. All right. It doesn't. You don't get a full deduction in the profit and loss. All you get in the profit and loss is what we call depreciation on that vehicle. So a motor vehicle, say 30%, you get 30% each year of that book value of that vehicle. All right.
Obviously, as the year goes, like as it gets older, the things get smaller, is that right?
Correct. That's diminishing value.
Yeah.
There's also straight line, but yeah, great observation.
Yeah, just the only other point there is as well to bear in mind that it's based on when you bought it as well. So like if you bought it in March, you're only going to get 1 month's depreciation, not 12 months depreciation. So you get 1/12 of that 30%.
So when you did it by March or what?
No, people often think that you're better to buy in April.
Because then
Last
the
year.
whole year, because
Yeah, then you're getting a whole
as it
year.
depreciates over the
Yeah.
year.
But everyone understand the concept of depreciation? All right. So capital item is a threshold of $1,000. So a laptop, for example, you need a laptop for your business. If it's over $1,000, it gets capitalised, depreciated at 50%, and that's what falls into your tax deduction. You get that based on how long you've owned it. All right. So that is what reduces your taxable profit, but you do not get the full deduction when you buy it.
So it's somewhat still.
Yeah.
So when you go and put your business jet ski and your business boat and all that, it's
Yeah.
That just raises a whole other question though, because that then raises a question, are these assets that you use for the business, okay?
it's called entertainment, and he's doing fishing products. So actually,
Perfect. I'm coming to work for him.
I love
and I'm
it.
there.
you've got to tow your jet ski that you're
Fishing
teaching your
products. There we
products.
go.
Well,
That's
don't you
the
have
one.
to justify if it's worth using for the business or not?
Yeah, you do have percentage wise, yeah.
Yeah.
You need to work out.
You can add
Like if you don't use that vehicle,
jet ski.
the whole time for the business, then the IRD do expect you to come up with an apportionment. And that, yeah, we don't even want to go into that.
So of all the people that need to buy a car and a boat or a jet ski, that is the only one. He could actually get away with it. The rest of you,
I'm saying if I wanted to buy a boat and then I used it once for my product and then I used it like to go to West Henry.
Yeah, that's where the percentage thing comes into. How
and then
often
would
are
you
you
put a
using it?
percentage of the petrol under your expenses?
Yeah.
And, you know,
They would
while
expect
the
that. They would expect a percentage allocation for everything, including the depreciation.
feeling,
So, key thing with assets, key thing with assets and expenses of a business, it should always have a nexus to generating the income. All right. So does everyone understand that? So I mean, you've got to be incurring that cost, all right, to generate income, all right, either now or in the future. So, and that's how you've got to justify it, okay? And there might be a part that is business percentage and private percentage, so mixed use assets, like Tony's talking about, and that's where you come up with a percentage claim because it's a mixed use asset.
so that's obviously the same, or in a similar way to like your home office.
Yep,
If you've got an office
correct.
at home, you can claim on expenses for part of your internet, you know, the square footage of that office versus how much time it's used for the business, power, phone.
Yes. Yes.
Yeah, the IRD has a formula, you don't have to work it out, is it?
They do that, set rates, or you can actually do it yourself. So yeah, but if you would like to know some more information about that, come see Tony and myself. We'll happily talk you through that. There's also some basic spreadsheets that, I mean, we'll share that with you as well. So yeah, good. Gee, a lot of interest in tax. The next one is 28%. What's that one? Anyone know that one? Just thought I'd cover these off because these are the four main ones. A company tax rate. So that's a flat rate, okay? It's not a marginal rate, it's a flat rate. So for every dollar from the get-go of profit, it's at 28%, okay? So you can start to see the differences in the different rates of tax, okay? Company might be something in the future for you guys.
Especially around the investment, you know, like I know some of you guys have been talking, you know, about potential getting investors, so companies a bit easier than sole trader.
It's the most common form of business, I would say, in New Zealand is through a company structure. Question?
Do we pay company tax then income tax?
Can you?
Like, is that what you
Will you?
Will
Yeah,
you?
will you?
Right, so two separate things, all right? So let's use Tony for example. Tony's a businessman, all right? He's got his business and he's got himself, all right? Let's say his business is run through a company, okay? Whatever profits that are left in that company, okay, is taxed within the company, all right? He takes profits out of that towards himself,
Yeah.
then it forms part of his tax return, all right? But to do that, there are tax rules, all right, which we call dividends. And currently you've got to pay a 5% dividend withholding tax for everything that you take out beyond the shareholder salary, all right? So that means it comes into your tax return at 33%, all right? If you take out a shareholder salary, so for the time and effort that Tony puts into his business, you can take that out, but then you pay tax at these marginal rates, all right? And that's what usually happens. In a company structure, there's a combination of it. There's working shareholders, they have a shareholder salary, okay, and then there's also dividends. And they're usually done on an annual basis. So, good question.
It's on summary level though, at your highest level of your question,
Yeah.
you're not double taxed. You know, in terms of it's marginalised out,
Yeah.
so you wouldn't be double taxed on that income.
Trusts. Does anyone know what a trust is?
I think it holds will until you turn 18.
Anyone know if your parents have got a family trust?
Not quite.
You do?
Question about
Probably got a
taxes.
family trust.
I'll come to that now. Let's leave it. I'll come to that. Sorry, what was that about a trust?
Oh, I was just asking about family
Oh.
trust.
Right. So trust is it's a deed. Okay. It's a document, comes from way back, kings and queens, knights and realms and all of that. Around basically looking, so when people used to go to war, they would basically leave their assets in trust with someone else. All right, and that's the terminology. So it's classified as a separate entity. Okay, separate legal entity. It has its own tax rate, as you can see, at 33. A trust has got trustees who basically are responsible. Same as a company has directors. Okay, they are responsible for how that company or entity is managed. All right, and a trust has beneficiaries. A company has shareholders. Okay, so there's similarities, but they're not the same. Okay, they are different. Okay. Trusts are very common in New Zealand as well. A lot of people use them for asset protection, estate planning, and creating separation between assets. Questions, anyone?
Can you take out a loan against a trust?
Yes, you can. Yep. Yep. You can have a loan under any one of these. Yep.
The biggest challenge with taking out a loan for a trust is just having you have to get a lot more signatures usually. Trustees.
Yep. So, is anyone part of a trust? Or no? Yep, trust, yep. A lot of family homes go into trust if mum and dad own a business. Usually it's kind of a thing. But that whole act has changed and I won't bore you with that. But, right. Can anyone tell me, so just a quick, everyone have their calculators or phones out or Excel, whatever. Got 5 questions for you. All right. Like to know what the GP percentage is here. Please. That's the first question.
Can you guys all see those figures?
No? Oh,
I'll just blow them up.
all right. So put your hand up if you think you've got it. Yeah, so we're just focusing on these figures down here, the year to date. These are your months. And if I said to you, what is your gross profit percentage? What is it?
There's an incentive for
Oh, get some Fritos out. All of a sudden, we got-
I got it.
92.46.
That's it. Excellent. All right. Well done.
Oh, you little boy.
Right, everyone's in the game now. Let's talk about the ground.
Everyone's in.
Chocolate
So
Fritos.
cheap, aren't they?
Okay. Next question. Net profit percentage.
No.
Just chocolate Fritos. Sugar in a fraction.
It's different.
Yeah, sorry.
Yeah, that's it.
I don't net profit percentage.
Oh,
Anyone?
46%.
46?
46.
I don't know if that's right. It's all right.
We got it wrong.
No,
29.1.
what is it?
29.16.
Yeah, there we go. That's it.
Bugger.
Yeah, it says 29.
Sam will give you a percentage of my business if I
That's
get
it.
the
Who
chocolate.
had it first?
Oh.
Ian.
1%.
Clean it up over here.
Yeah, we'll look at Amazon.
29.16. That's
That's a
pretty.
good business, man.
That's pretty good.
That's a great business.
All right, that's 30%. You know, that's before tax. That's really good. All right. So if this was a company, okay, what would the tax be on that profit?
10.5%.
28.
No, company.
Times 10.5%.
28.
Times 0.15.
Yep, that's the rate. What's the amount?
Oh, the first bit will be 10.5, the second bit will be
220. No.
No, company's flat rate.
Yep,
Oh, so
remember?
it's 28.
Yeah, we're talking about the company.
28 flat rates. So what's the tax?
You're right. You're right at the sole
So we paid
trader.
$2,203
Oh,
in
I
tax.
think Lily was first though. What did you get, Lily? 2.2? 2,200, yeah.
How much they have to pay?
Right, so that's the tax amount that goes to the ID, and you don't see that.
So you need to put that aside somewhere.
So you put that aside, okay? So really good. Can anyone tell me? Here's a tricky one. All right. What's the break even?
That is that.
This will remove a break.
Exactly.
Yeah, 2 chocolate
No,
flashes.
Thomas has his laptops.
Oh, you just
What?
No.
I'm just setting up the formula. I'm not actually calculating it on the computer. Now we can't.
There you go.
It's better than this gross profit covers costs.
You got it?
Yeah.
Very good. Total overheads, divide this by the GP percentage. Right.
What's gross profit?
What was the GP?
Last fingers, here we go.
What about the GP? Oh, it's 92.
Yeah, okay, sure. It's not.
185?
Okay, 68.
68.46.
Sorry?
68.46. 68.46. 15,801.
Walking different numbers.
15,000.
I got 18,568.
Wait, that's one. No.
What gross profit percentage?
What's the GP?
Gross profit percentage.
Is it 92?
Total overhead
We need to show our work.
$15,801.
Here we go, the gross profit, 24,953,
Yeah.
Yeah.
divided by 26,988, because that's what gives us our GP.
Which is what?
0.92.
That's 92.
Anyone?
I think it was 92, wasn't it? That was the first
Yeah.
question.
0.92.
988, so it's 92%, is that right?
Yeah.
92% GP.
Yeah,
Yep.
90.
So the total overheads are, what are the total overheads, team?
17.32.
And total overheads divided by GP percentage, what's
183.
that?
183? No, I think it was 180 something.
It was 180 something. We got that.
Very good.
17,083 divided by
185.6.
92,
18.
18,568.
18.
Oh no, because we divided it by.
Which is what I got.
Oh,
It's just-
oh, we put the decimal
Zero.
point.
We didn't put that.
Yeah.
We divided by 92,
I
not.
was wondering, yeah, because I was like, gee, I got that wrong. No, no. So,
Oh, so almost
They're
there.
yours. You're the
I got, right, there you are. Okay,
Yeah,
well, that's a good thing. So there we go, all right. That was my quick quiz. We'll take a seat now.
Who knew it?
Who got close though? Who got close? Yeah, close. Close. Yep. There's one.
Sam was also the only.
like 17,000.
No, I just.
Sam's also the only one of the only accounting students in here. He's got some.
Oh, good.
He's got a reputation to uphold.
So that's enough about tax and some sugar hit. So any questions on tax? Sorry, before I move on. How's the time there? We're going all right?
Oh, there are probably dozens
Okay.
at some point.
Right, okay, so let's just move on to the different types of applications. Tony spoke briefly about them. As you can see, Xero's got heaps. Some are good, some are shit. And it's hard to keep up because there's just basically new apps coming out on a daily basis. But when people talk about an app stack, it's basically the applications that you have to run your business. Most businesses now are trying to put everything into the cloud. A good place to start is having a ledger that's in the cloud, which we have, which is Xero, and then identifying what you need to run your business, and then having an application to help you with that bolts on. I strongly recommend that if you're in Google or if you're in Xero, that you just go and have a look at all the applications. Does everyone know how to do that? So if you basically just go in and I just usually do it this way, but there's many other ways. Oh, sorry, Google. So Xero applications.
Do you have to pay for each of those?
Yes,
Commonly, yeah.
most of them, yeah.
Yep.
Good question.
Oh, goodness. 13.
So right here you can basically search for what you're after. I kind of like to go up the top here under industries and have a look, maybe your business falls into one of these. Let's just say manufacturing, and you hit manufacturing, and it kind of brings up a lot of the applications, and it's got a little star rating and the amount of people, so this is really popular, as you can see, Unleashed. You can click into these tiles, read a bit more about it, takes you through to the application website and how it works. But a lot of these ones are very Xero friendly, which is good. Some of them you'll see, if you read the descriptions, are really good with certain things. That's what they were designed to do. So it might be inventory or point of sale. And I think it's really important to understand what you need help with or what problem you're trying to solve, or once you've got that understanding, then it becomes a lot easier process to figure out which one you think is best suitable. Like Ms. Russell said, some of them are quite expensive. So when you're doing your pricing and your profits, be careful, because we've seen a lot of clients use these and then realise it's not actually taking away a pain point or creating the efficiency they were after. So yes, there's heaps. Any questions on that? I mean,
Do they download to your Xero account? Is that how it works?
so it's a separate application and then it integrates with Xero. All right, so it'll feed data across into Xero.
The majority of them will be cloud-based apps or phone-based apps.
Okay.
Martin, question over here.
Question? Yes, sorry.
Are these add-ons free for customers? Or the people using this add-on, do they have to pay an extra fee?
Yeah, so each app will have its own extras. These are all different companies. So that's what he's just said, they all talk to Xero,
Yep.
but they're all different. So haven't you been, I've heard you talk about Tradeify, for example. Yeah, so if you were to get the Tradeify app, you'll pay, they'll all have a free trial, that was a 2-week free trial, a month free
And
trial.
they'll all guide you through how they interface with Xero as
And then
well.
they start charging.
Yeah.
So that would be an expense though, wouldn't it? This is expense.
Yeah, it's most of these are subscription models, if not all.
That'll help you profit.
So So yeah, so you pay monthly basically to have use of this cloud application. So you mentioned Tradify, that's under construction and trades. And the trades use it, it's becoming really popular, particularly these three, quite popular with your smaller trades. But they all offer something different. So it's really important to understand what you're after. That's why I said that. It's usually one key thing and then it's got a lot of other sort of bells and whistles around it. But yeah, I think have a play, have an experiment. There's lots of demos, there's lots of YouTube stuff. Have a look. There's trials. Some of them offer free trials, 7, 14 days or whatever. So have a play. Some of them are really good, I must say. But yeah, some of them not so good. So
which ones would you recommend we stay away from?
Oh, it depends on your industry
Oh,
and also what you're doing. Whether you're trying to get an inventory sorted, point of sales. If you're just trying to track things, jobs, all that sort of stuff. So it's really specific to your business, and that's why there's so many. Because there's not one that does everything. I mean, there are that stuff, but they're not applications. They're actually proper ERP and CRM systems that are custom made for big corporates. But for small business, this way you can build an app stack where you can get the best of both worlds, but you're paying for it. So you might go and get best fit for inventory. Yep, plug that in. Get your online sort of Shopify's and plug that in, and so you build a nice little app stack, and it's all built around the Xero ledger, so that you can run your business. And it's all cloud based, and if it's all set up right, it all integrates nicely. So that's my big probably takeaway. Is to go and have a play with the applications. Once your Xero is up and running, go and have a play to see if there's something there, and then come and have a chat to Tony or myself. If you think you find one or two, and we're not experts in advising, well, I'm not, maybe Tony is, what I would say is yes, that I've seen it, I've used it, it's good for this, this and this. But I'll never officially say this is the best app for you, because it's like anything. Some people go, I had a client that came to us and said, our previous account said do this, this and this. And all the trades were running Android devices, and the software only worked on Apple. So do you see what I mean? So it's really having that proper experimental sort of open-minded about things. And a great place to start is, what are the most popular? What has the highest ratings? And then click in and go, well, what are the key features? And does that sort of, once you're on the right track, and then it's a matter of, I'll give it a crack, try the free trial. Does it work? Do I like it? Is it actually serving a purpose? Yes, I do. Great. Okay. Let's give it a go for a few months. Yeah. Alrighty.
And most of them you can, if it's a monthly subscription, you can cancel out fairly easily at the end of each month. Just check your terms and conditions. So that slide bean one, we bought the first month, so then I forgot and rolled over to the second month, which is fine. So I just cancelled this subscription, but I have access to it now for that second month, and then at the end of that, it'll stop.
Any other questions? So up the top you can see you can search by functions, alright, all your industries, and then they've got this collections. I don't really go into too much. Staff picks, probably just the mainstream, but they might be a bit biased towards whoever Xero is maybe funding in the background. So the really good ones, usually Xero, sometimes buy. HubDoc was one. HubDoc was a separate company. Xero bought it.
And now Approval Max as well seems to be popping up.
Yes, it's becoming really popular. Yeah. And now HubDoc, for example, is actually built into the standard Xero subscription. But you guys on cash book, is it in the cash book? I don't know. Yeah. Not sure.
Don't think it is.
Yeah. But so that's another cool app that I reckon you can have a play with as well. Down the track, if things start to pick up and you're doing your debtors and your creditors, HubDoc's quite good. Just document helps bring those pieces of invoices into your Xero and keep everything electronic. Lot of small businesses are starting to jump on that and use that functionality a lot more. Questions? All good? Right. So basically, that's all I have for you today. Quite a big, I've talked about sport and the connection with business. And I'm big on knowing your numbers, because you can make targets, you can actually see progress, and if you actually want your business to get off the ground, you're going to have to know your numbers well. And there was a YouTube clip about a dragon's den that I found. I don't know if you've got sound in here, Ms. Rupp. You do? And it's about 10 minutes. I think we've got time. But yeah.
I like that. That quote's good. So if you can't see it, if you can't measure it, you can't track it. If you can't track it, then how do you know what to improve? Know your numbers, know your industry. It's exactly the same as the goals you set for your academics. So if you can't measure it, if you just say, I want to be successful, well, what's the measure? I want to get merits. Because if you don't say that, then how are you going to track if you're actually on the path? And then if you're not getting merits, you're getting achieves, and you haven't quantified it, then how do you know how to improve? Okay.
Before you know it, you're binging on Netflix and ice cream and what.
Hello, my name is Kelly Forbes, and this is my business partner, Jill Hayward. And we are here today to ask you for an investment of £60,000. In return, we would like to give you 10% of our business. The bag is an exciting desk in a backpack. It's ergonomically designed, also has a chest strap with a whistle, and an outside water bottle holder so there are no inside spills. It has a fold-down desk, and as we all know, children love pockets. The bag is full of them. It even has a secret compartment.
Our strategy from day one was to act big, be big. So, armed with a prototype, we approached Nickelodeon with a proposal that would allow a startup company access to a TV advertising campaign. And with the help of our children and a shoestring budget, we created a TV ad. And the first spot aired at 6:55 in the morning. And amazingly, just minutes later, we made our first website sale. We sold out in 7 weeks. In the 20 months since trading, we have sold 13,000 bags.
And we've attained a turnover of £525,000.
Thank you very much. Would you like to see our bags?
A highly professional pitch from mumpreneurs Kelly Forbes and Jill Hayward. they need a cash boost of £60,000 to grow their fun-packed children's rucksacks into a global brand, and they're offering a 10% stake in return. Theo Pafitis is first to question the two friends.
Right, ladies, hello.
Hello.
I'm Theo.
Hi, Theo.
Wow, £500,000 turnover in 20 months?
Yes.
Did you make any money out of it?
We turned a small profit at the end of last year of £6,000.
And the new year, let's
Yes.
assume we get no investment here, how much are you going to turn over?
We're going to turn over £720,000.
And you estimate you're going to make?
£130,000.
No, 130,000.
Okay. How much do you sell the big bag for?
£43.
That's retail.
That's including VAT.
Okay, last question from me. 60,000 quid.
What are we going to do with it?
Yep.
Well, we want to have enough stock in the UK or wherever country we're in so that we never have to have customers waiting for our bags.
How much is going into stock?
55,000.
So all of it?
Yes. Well, not all of it, but
In
the
effect,
majority.
in effect,
yes.
it's all
Yeah.
going to cash flow. Okay, thank you.
Confident on...
So my observations of that was, know your numbers. First dragon and all the other dragons are writing down all the answers about the numbers. Sale price, revenue, turnover, profit, all the things that we've covered off over the last two sessions, so important, all right? And they nailed it, really, because they were prepared. So, yeah, just thought I'd share that with you. We'll keep just watching.
Answers from the assured entrepreneurs. Deborah Meaden wants to drill down into the business itself.
Hello, I'm Deborah.
Hello.
So what has changed in your model now that's going to drive profit going forward when you weren't driving profit in the past, although you had a very nice, healthy turnover?
A number of things. We've really spent a long time over the last 20 months working out what makes our business tick. So we've reduced our fulfillment costs substantially. We've brought out extra add-on accessories, which are higher margin. I mean, everywhere in the business we have just worked out ways.
So what has that now done to your margins?
Well, the production of the bag will go down from £15.87 to about £10.87.
Cost of
The
goods?
shipping is around £1.20 and that will come down to about just over £1.
Yeah.
We agreed a revenue share with our designer, so he is on about £1 and that will go down to about 80p.
So compare your margins now to your margins
The
previously.
margin is £11.90 currently. For the next orders it will be £16.60.
Thank you.
The first-time entrepreneurs look remarkably composed in this forum. Peter Jones is intrigued.
So, a little bit about your background.
We both met when we were 21. We both come from an advertising background and I left and started up a family and Jill continued her career in
So I've worked in TV advertising and sales and buying for Viacom for 10 years and took redundancy when they closed part of the business.
So, is this going to be a full-time thing for you both?
Yes, that's what that's our
Absolutely.
plan. We love what we do as well. We really.
Can you see that question? Is this going to be a full-time thing or are you going to have a job on the side? So talking about the super profit, the effort in the business or how actively involved you are, so those are questions, that we've just sort of covered off. So now that you've got an understanding why these questions come, because investors are thinking about that. They want to know how their money's going to work in your business.
We're excited about it.
Well, Kelly and Jill. I love the product. Seeing my kids every morning pick up their rucksack, I think yours is better. I love the quality of the product. I just think you've gone into such detail.
Thank you.
I'm going to make you an offer. I think it's about how do we take this brand and really extend it and make it something far bigger So I'm going to offer you the full amount of money.
How a mother of two makes a side income of 5 figures profit a month by selling little digital assets online on Amazon.
Don't have premium.
So I want 20%.
The impressive businesswomen finally receive an offer, but for 3 times the amount they were.
Everyone got that? 60,000 for 30%.
He doesn't value the business.
Pardon?
What was the original offer?
10, yeah.
Yeah, she wanted to give away 10% for 60,000. He's come in and said 30% for 60,000. All right.
Were initially willing to give away. Will Theo Paphitis now choose to undercut his rival investor?
So, would I invest 60,000 quid in you two? And the answer is yes, I would.
Thank you.
But for me to make a difference to this business, I'd need to put some effort in. I need to look at the retail channel, whether it be my own stores or competitor stores. I've got to have a reasonable hold of it. So, I too will offer you £60,000, 30% of the business.
Thank you. Okay, thank you.
Kelly, if you could epitomise what you wanted from the dragon, what would it be?
We think this thing could go really big. We like to say go global, but we don't think we can do this on our own.
I think your hurdle is finding the distribution channels. And that I believe that could be of great assistance with. So I would offer 60k for 30% as well.
Okay, thanks, Hillary.
Unusually, the Dragons seem to be in agreement about the level of equity they require. Will Deborah Meaden get nearer to the 10% Kelly and Jill originally wanted to part with?
I think it is fair to say that the product's good. You know what you're doing, you're very smart, you're very perceptive, all of those things. But you haven't taken the UK yet, and you're already looking international. I think what faces you is how you manage to get the penetration you want within your home market and manage that overseas piece.
Yeah.
And it's something I do in many of my businesses. So I too am going to make you an offer. And I'm going to offer you the full amount, £60,000 for 30% of business.
Thank you. Thank you, Deborah.
Okay. So I think you'll...
I'm just going to stop it there because I think the point I was trying to make is that you can see what we've covered off in the last 2 sessions, how this is needed, the knowledge is needed within how you operate the business. We've shown you some cool software around how to do that. Try and make it a bit easier for yourselves, try and make it a bit fun. Because business is supposed to be fun, I believe, otherwise why would you get into it? You've got to enjoy it, but to enjoy it I reckon you've got to be tracking what you're doing. Otherwise no one's really going to want to jump on board with you, I reckon. Just my take on it, happy to be proven wrong. But this goes on basically that all the dragons pitch and offer money. There's one more still to come, but we won't watch that. And then they have a decision to make around whether they want to give away 30% of their business. I thought they were really smart. They've actually come back and said to 2 of the dragons, their 2 most preferred dragons, how about both of you come on board and you share it, basically 30k for 15%, and therefore they get the benefit of 2 dragons' knowledge, and they give him away, and they're happy to give away 30% for that. So very smart, I thought, and Really enjoyed the fact that they just nailed their numbers up front, and there's just no question about it. Product is good, numbers is good, all of a sudden people are interested. If one of those two aren't right, you're going to start losing dragons really quickly. That's it from me. Really? Yeah. I don't know how much time.
Good. And who's watched Dragon's Den and seen some absolute corkers where they've just been eaten alive by the dragons? And what do they all have in common?
They don't know the numbers.
They don't know the numbers. They can have the most amazing product. Another awesome session. Thank you both. I didn't realise tax and accounting could actually be so interesting. I don't know, I'm actually like ever so slightly excited about it. I won't be starting my own business anytime soon, but I certainly feel a little bit better equipped to help you on a day-to-day basis, and hopefully you are all feeling a little bit better equipped to get into this world, complicated financial world, or that side of the business. So a huge big thank you to Tony and Carl for their time this afternoon, please.